I've gotten into 5 trades in the past 3 days, and these 5 trades are somewhat alarming, but let's see how it goes, right? Let's head right into it. So every single trade here is based on my technical analysis first and foremost, rather than any other analysis I'm supposed to be taking out. We're going to start with the first one, the New Zealand Swiss franc. The New Zealand Swiss franc, remember, it's the same strategy. We're looking for a fair value gap on the monthly, weekly. I do not like to look for fair value gaps on the daily. So on the weekly, I have this fair value gap right here. I have this fair value gap right here on the weekly. We'll put that up as a weekly. And do I have an overlapping reason to take this trade? Yes, there's an overlapping event right here. So the usual, I just dive straight into the 4 hours to wait for a sharp turn. Normally, I'm supposed to check the daily also if I can find a sharp turn here. On the daily, we are having this scenario, which is fair value gap in, but we do not have a daily fair value gap out. But then again, I can also still check on the 4 hours. So on the 4 hours, we have this in, and we have a reason to trade this. This is the fair value gap out. And what this simply means is I can now set a trade around this zone. This right here is my trade. So I entered this trade yesterday around here. Stop loss above her, aiming for the usual 2, just around 2 to 3 risk reward ratio. My stop loss is actually yeah, it's right there. So this is the first trade, and it's been moving slowly in profit. I expect it to take a long time before this trade ends. The next trade is the Australian dollar Japanese yen. Now, this trade has been scaring me. I'm like, should I call it scariest trade I have taken currently? Not really the scariest, but this is quite okay. Similar scenario, fair value gap on the weekly, an overlapping defense. If we check on the daily, we do not have a fair value gap in. Okay, we do have a fair value gap in right here. So fair value gap in. Allow me screw that up. So, oh, that's a mistake. And you can see that fair value gap in. Well, I do not have a fair value gap out on the daily. But on the 4 hours, I have miracles, right? I have 4 hours in right here, and then wait for it, a 4 hours out right here. So now I'm scared of one thing. I'm looking at this 4 hours bearish fair value gap being inversed right now, and it is quite scary. My whole observation is I am watching out for this high that led to the fair value gap. If this high gets taken out, then I would most likely start reducing my trades. I'll reduce the amount of trades I have in here and watch it till it goes. But let's head further into this. Now we have the risky trades. These are the riskier trades. The US dollar against the Swiss franc, and there's a reason why I call this trade risky. It is based on fundamental analysis. Technical analysis, it is not a bad trade. This is a weekly fair value gap with its own overlapping defense coming from the other end. And then we have another very hefty weekly fair value gap with its overlapping defense coming way from the other side. In fact, 2 from the other side. On the daily, we are hoping to see a fair value gap in and a fair value gap out, but what we have is just a fair value gap in, which is not a so good sign. Because why is it not a so good sign? It is simple. It is because after the fair value gap in, if there's no fair value gap out, we're not setting off a 2-hour return. That is a 2 risk to reward ratio return. And then on the 4 hours, right? On the 4 hours, we have, in fact, matter of fact, we have a very funny situation here. We have the fair value gap in, but then we have a very clear fair value gap out situation. So how come I'm in this trade? What's my move in this trade? It's simple. So my move in this trade is this. I entered this trade, I think yesterday. Yeah, right there. So this is where I entered the trade, on that candle right at that spot. Stop loss supposed to be here. Take profit 2 away. 2 away is right here. So I did a little bit of extension and then extended my safety net higher. So this would be 1.7 risk to reward ratio. Also, I had entered this trade and I accidentally closed it, so I entered it again with a less amount of stop loss, with a less amount of currency value, basically. The next is Australian dollar, Swiss franc. Now, these trades are scaring me as I move even further, because each and every one of these trades has been producing more and more left results recently, and it's scaring me, I won't lie. But let's see what it is. On the weekly, I have the usual, a beautiful weekly fair value gap with 2 overlapping defenses. On the daily, I do have my fair value gap in on the daily, but I have not gotten a fair value gap out scenario. On the 4 hours, what do I have? On the 4 hours, I then have my fair value gap in again, and then I had my first fair value gap out. Now I did not trust this first one, so I waited because I saw this other fair value gap in right here. I waited and said to myself, let's see what's gonna happen if order flow is gonna occur, meaning 2 bearish fair value gap without a bullish fair value gap. So I did get the order flow, and when I entered this trade, you can see right here, after I got this clear show of order flow, I then entered the trade right here. But this is the mistake I made. I was supposed to take this all the way up here, aiming for the usual 2, right? This is what I was supposed to do, but I ended up doing this instead, which was a huge mistake. I was making the trade from my phone. I ended up using this particular scenario for this as a 2-to-1 risk to reward ratio, which is absolutely wrong. So it means if price should go above this high, I'm gone. Like, I've lost this trade, which is what it means. But it's a good thing. Why? Because if price goes above there, I'll be waiting for a second candle rejection. And last but not least is the Canadian dollar, Swiss franc, which is right here. Very similar scenario. We have a bearish fair value gap up here with no clear overlapping defense except this. But then again, we now have this one. Now this second fair value gap is in my opinion the most risky fair value gap I've ever taken yet. There is absolutely no overlapping defense because price has never got into this area before in the history of my chart currently. I don't know of TradingView, but in the history of this chart, price has never gotten there. So on the weekly, no overlapping defense. On the daily, I have my fair value gap in on the daily. A very strong fair value gap in. Now this is why I say this is a very risky move. But on the 4 hours, after price went through the fair value gap, you can see on the weekly it hasn't closed much, but after price went through it, the fair value gap, it created the first one, that is the fair value gap in, and then started showing signs of weakness. It then created another in, immediately followed by a fair value gap out, meaning this should be the most protected zone currently. If price goes above this, I should be waiting for a 2 candle rejection or trail price for this high. Now, I still decided to go with the trade, right? I still decided to go with this trade. And you see this trade I entered right here on this candle. Place my stop loss above every other thing, you know, give it a little breathing space, and all the way down here. So currently we have 5 trades running, very risky trades. I have another trade coming up, which is the Euro Japanese yen. On the Euro Japanese yen, you can see on the daily, I have this situation. Why am I really watching this daily situation? You all know I do not really like daily situations, but why am I watching this one? So on the daily, I have a fair value gap in, right? A fair value gap up, a bullish fair value gap, and then immediately it got overthrown. You can see price closed way below the fair value gap, which is an inverse. Now, if price should inverse a fair value gap, we all know it should most likely start heading for the cost of that fair value gap, which is the short-term low or short-term high, the intermediate term low or intermediate term high. This is now right here is the intermediate term low that led to the fair value gap. Let me put this ITL here, intermediate term low, which led to this fair value gap. So what I'm watching out for is on the 1 hour, I'm seeing how price mitigates with this daily bearish fair value gap. If I spot an ST on the 1 hour here, I am taking this trade with 3 targets in line, right? Let's just assume the trade comes in here. I'll be taking the trade with 3 targets in line. This is the first target, this is the second target, and this is the third target. So let's put that into perspective on the daily. What that really is I'm aiming for the end of the fair value gap, the bearish fair value gap, the next low between the fair value gap and the intermediate term low, and then last, the intermediate term low. So my dear friends and watchers, these are the 6 markets, basically 6 markets I am looking at, and let's keep our fingers crossed, see how it goes. I like to see how this really goes. I'm scared that these trades are going to go well against me. I have 3 trades constantly screaming against me when I look at the fundamental analysis. I don't want to go to the fundamental analysis because it's going to be a long video if I do so, but I really want these 5 trades to work. That will be a whipping 5% of the account balance, possibly 5%, around 5%, but let's see how it goes anyway. I'd like to tell you guys thank you for watching. I'll catch you all on another one, and do not forget to hit the subscribe button, hit the like button, and share this video to people who you think this analysis would be useful to. Peace.